And welcome everyone to a panel on strong customer authentication and its space in the digital identity universe. We've got an exciting panel today from the UK and the US, so we'll have a transatlantic perspective here, and we'll be starting off from the broader brush of setting the scene as to where strong customer authentication is and where it's going, where the customer experience is looking to play its part, and obviously the importance of SCA in preventing financial crime. So without further ado, I move on to our panel who can introduce themselves in turn. But if we start from a UK perspective, if we start off with Sam, if you would like to kick off with your opening remarks.
Hi, I'm Sam Everington. I'm the Director of Products at Starling Bank for the customer experience and the look and feel of the products we offer to our personal and business account customers. We're a UK challenger for those who are outside of our market and not aware of what we're doing. My perspective on SCA and where we're going, it's here to stay. It's been brought in various forms under various bits of legislation in the EU and through to the UK. And it is having an impact in the channels that it exists today and where it's coming in, particularly as we see card transactions switching over to 3DS2, we do see a role. So the focus for us is on delivering those security benefits while minimizing the friction that it's introducing, because we're so used to paying with a click of a button, and you don't get that experience anymore if we have to step out to your phone and challenge the transaction. And so how can we deliver the security and the benefits of SCA whilst giving a customer experience that's as slick and seamless and quick as you would expect from a challenger like Starling?
Indeed. Melissa, perhaps you first from the US perspective as another commercial player.
Sure, happy to do that. So hi, I'm Melissa Heng. I'm with Capital One. I'm a senior director in identity product management here at Capital One, and I work on customer authentication. So, I think in the US, what we see is financial institutions still rely heavily on our traditional ways of authenticating our customers. So passwords, one-time codes via SMS. And we know that there's weakness in some of these methods. Obviously, passwords can be stolen, malware, phishing, breaches, etc. SMS one-time codes are susceptible to mobile account takeover and phishing. So there's a lot going on as far as fraudsters trying to get after the traditional ways that we authenticate. The industry is responding with compensating controls. And so in that vein, we're doing things like collecting data from our mobile account, our mobile network operators about phone ownership, or adding context and stronger messaging for our customers to help them understanding, what they're really authenticating when they're using one-time codes. And at the same time that we're strengthening kind of the traditional stuff and trying to prop that up, we are starting to roll out newer methods. You're seeing things more prominent like mobile app authentication, biometrics, and even tokens. For us, I think the key in the US is customer adoption of these new authentication methods. And that's the key barrier that we're trying to overcome at this time.
Thank you. And back to the UK, Jonathan, obviously you now have a regulatory hat as well as your previous work across the piece and standards. So your take.
So I'm a payment specialist at the Payment Systems Regulator. The PSR is the regulatory body which looks after payment systems in the United Kingdom. And even though we're not the lead regulatory authority on strong customer authentication in the UK, that would be the FCA, we actually look at where we're very interested in where the authentication methods help protect both consumers and the integrity of the payment system. And I think that I view strong customer authentication very much as an enabler for new technologies and potentially new means of making payments or doing business for lots of businesses and consumers. So I think it's potentially a really interesting game changer.
Thank you. And last but not least, Andrew, from a US and international. FIDO is obviously international. So from an international perspective, your view on this.
Yeah, thank you. So I'm Andrew Shikiar, Executive Director and Chief Marketing Officer at FIDO Alliance. For those of you who don't know, FIDO Alliance is a consortia of over 250 companies working together to create open standards for strong user authentication. So we look at strong customer authentication from a lowercase SCA standpoint, if you will, very focused on creating interoperable means for this to be deployed as widely as possible. We're seeing strong adoption in the marketplace, largely because we're starting to see broad support on the device side. So currently, every Windows 10 PC, every Android handset, most modern Apple devices all have the ability now for consumers to leverage FIDO authentication. So we're really eager to see more financial institutions and service providers of all sizes in all industries start to adopt this better means of user authentication so that we could stop things like phishing, data breaches, and other credential attacks, which really threaten the integrity of the network economy itself.
Excellent. Okay, so I'm going back, but I'll stick with the same order for this next question. Beyond the standards and the compliance aspects, which obviously we can all read up on, where do we all see the balance being placed between consumer friction and security, and how do we enable our customers to have a choice of how they wish to be authenticated, and managing in particular in order to manage financial inclusion, for example, disability access, etc. So how do we manage to square that particular circle? Sam, to you again first, if I may.
Yes, I hope it's not a choice. We don't have to pick between a reasonable experience and protecting consumers. You just have to think differently about the problem. And we have some advantages being a digital bank and a challenge respect, because opened their accounts from their smartphones, and their primary method of access is their smartphone. And so it's probably easier for us than other people who opened accounts through branches and more traditional methods to strongly authenticate someone, because I have a device that I can re-identify later, and that device can also change you for knowledge or for biometrics. And so we've got a token to push out to you that you always have in your possession, effectively, particularly if you're the kind of person who's opened an account in a mobile-only bank. So I hope it's not a choice you have to pick, but you've got to choose when to challenge the transactions and when to have that friction and when to step things up. And we launched online banking towards the end of the year. So we do now have a browser-based banking solution as well. And we spent a long time on the security models of that, because you want it to be an option and a fallback. And particularly if you're a business and you're dealing with the accounts all day, doing so on the computer is a lot more convenient for you. But there's much higher levels of risk with transactions coming, far easier to intercept the connections and manipulate the requests and the response. And so you just can't trust the client in the same way you can trust a key in the enclave on the handset that's signing the requests. And so we effectively pick to use the phone as the security factor to authenticate transactions when we need a step up, even while you're in the browser. So if you go and make a payment at some point and you could potentially build up a batch of them first, we will kick out to the phone and actually confirm the biometrics and the possession, get a signature off the handset as well to show that it's still there and present. Through to even knowing the person holding the phone is the person using the browser. It's possible. We see a lot of attacks where people are pretending to be banks, police, the telecoms networks. Being your ISP is a very common form of attack we're seeing at the moment, convincing you your internet is compromised and that you need to move your money elsewhere. And the fraudsters want to get control of the account to talk you into or encourage you or help you to move the money. And so we want to know that the customer who originally opened the account is still the one holding the phone or still the one physically using the computer and not someone in far off land.
Oh, indeed, and obviously, over the last year, we've seen a huge increase of those social engineering attacks, with the COVID dynamic also playing into that. But so Melissa, back over to you. Same sort of question as to Sam just then.
Yeah, I agree with Sam that it shouldn't have to be a choice. So I think, we as financial institutions need to be good at both risk detection, using our layered security controls, as well as customer experience. So being good at both means that we don't have to make it a choice. I do also want to touch on the concept that you brought up of choice and customer choice. in my experience, it is important that we provide customers with choices. We find customers in very real circumstances where they don't have access to that phone number on file. They may not have registered a biometric. They may have changed their mobile device and no longer have our app. These are very real moments for our customers, and they really don't want to have to worry about security hoops when they need to get to a financial transaction. So I think the trick for, financial institutions is going to be providing that customer choice, providing those options that are secure, because more and more of our, options are obviously being attacked. So we need to provide those options that are secure. And then also making sure that we get the customer experience right for those strong authentication methods, such that those are ones that our customers find easy to adopt and easy to use. So, really the onus is on us to do all the things: great risk detection, know when the right time to ask the customer to do something is, and provide an excellent customer experience when the customer needs to do something.
Thank you. And Jonathan, back over to you. From a regulatory perspective, how do you see this playing out from a UK perspective, but also increasingly as we look to cross-border payments?
So I think the important thing to realize is that protecting customers' accounts is obviously a key requirement on financial institutions. And to be honest, they've done a very good job over the years in keeping up and keeping ahead of the fraudsters. Obviously, there are occasional cases where the fraudsters do manage to get in, but a lot of the safeguards have been developed and improved over the years. But it is a sort of arms race that we are engaged in. And I guess some of the challenge is, how do you ensure that the systems are secure enough? How do you ensure that you have confidence that it really is your customer that's engaging in the transaction, whether that's logging into their account, downloading their data, or initiating their payment, as opposed to a fraudster who's merely got their information, maybe downloaded their password from some cybersecurity hack. And so there are some real concerns about protecting customers, which is very important that we bear in mind. But also we need to make sure that we are treating vulnerable customers fairly. Not every customer has the same capabilities in themselves or the same access to the same resources. So it is a balance to be struck, and it may well be that a one-size-fits-all approach doesn't actually serve all the customers who might want to be served by that organization.
Indeed. And Andrew, from a FIDO perspective, what's your take on this particular issue?
Well, I think what Melissa said is real telling. I mean, and I think you have to keep the customer first as you're looking at any new technology. Ultimately, like in the banking sector, customers just want to get online and check their balance or make a transaction or make a transfer, whatever it may be. And it needs to be easy and it needs to be secure. So the answer is yes, we need to do both. Inherently, ease of use is really important. We've seen over time that different attempts at strong authentication, the opt-in rate drops down when it's too hard to use. So asking people to use, traditional like PKI tokens and things like that are a non-starter for the general public because they'll opt not to use it if there's a way to get around it. Likewise, that's the whole problem with passwords. Frankly, one of the problems is that the easier the password is to remember, the easier it is to enter, and the easier it is to access your account. Of course, the problem with that is that it creates a massive risk in the sense that any password, let alone a weak password, is an open door for a hacker to hack into. So FIDO's tagline is simpler, stronger authentication. I think the simpler piece is absolutely critical. In our view, any sort of strong authentication needs to be a single gesture activity. So whether that's touching a security key or using a device biometric, our belief is that once you have simpler, stronger user authentication, strong customer authentication in someone's hands, the more likely they are to use it. And our initial user testing that we're seeing is supports that. Right, so people like the idea of using a device biometric. At the same time, they do want to know that there is a fallback. To Melissa's point, that if they need to access their account in another way, we need to present them with that. Ultimately, I think we're all on the same journey here. Going beyond passwords is a journey. It's not going to be there overnight. We need to get consumers comfortable with the concept of a password-free login, if you will. such that over time they can be truly weaned off that dependence, which will not only protect them, but protect the institutions as well.
Okay, thank you. And just to forewarn you, I will now reverse the order for the questions. So I'll go straight back to you on this one. And indeed, you set me up quite nicely for the next question, which is, can we ever really see a world beyond passwords where they just cease to exist as a concept? And also building on that, how do we prevent malicious users from attacking and tricking our authentication process? Obviously, the typical phishing emails, etc. Obviously, easily reveal a password, a weak password or a strong password. But how do you see either the death of passwords, which, let's face it, we've been predicting since about 2012 at the latest. Every year has been the last year of the password since at least 2012. Is 2021 finally going to be that year? And then from what we introduced to replace it, how are we going to prevent people from tricking their way through whichever authentication metrics we start to adopt? As I say, in reverse order again, back to Andrew.
Yeah, so let me try to answer both those. Is 2021 the year where the password dies? No, it's not. I think our focus is on reducing dependence on passwords. Can we get to a place as an industry where we're not dependent on passwords for user authentication? Yes, absolutely. Might there still be a password as a fallback, for the foreseeable future? Likely. But I think as we wean ourselves and our consumers, our customers off this dependence, the network becomes a safer place. I do believe that over the next 4 years, next 4 to 5 years, say by 2025, the vast majority of consumer online services will offer passwordless options for login. And our hope, of course, is that most of those are using something that's fully secure, like FIDO. So I think that as we start propagating those options, it starts to become the default for people to use. So think about Touch ID. So Apple did the market a wonderful service by introducing Touch ID as a means to unlock their phone. Before that, phones weren't really protected often, and maybe they were used by a PIN, but all of a sudden, Touch ID was a new paradigm that allowed you to use something called the on-device biometric at scale to unlock your phone and to start logging into apps. And what we're trying to do with FIDO, and I think a lot of the modern authentication systems are trying to take the same paradigm to consumers, which is the same thing you do to unlock your device is what you now do to log in. So look at Windows Hello, for example. Every Windows 10 PC has Windows Hello, and all of those support FIDO authentication. We're starting to see more and more online services allow consumers to do browser-based authentication using Windows Hello. So go to eBay.com, for example. eBay is a massive marketplace for consumers and sellers worldwide. Right now, you go to eBay, in most countries, you're presented with the option of using Windows Hello or Touch ID or Android fingerprint instead of using your password. So it's that sort of pattern which will start encouraging users to move beyond passwords, which ultimately will allow the relying parties or the service providers to eventually take them off their servers. As soon as you have other means to do account recovery, other than passwords, we can start getting to that point. But it is a journey to get there, to really get rid of passwords, and I don't think it's imperative to get rid of them right away. But eliminating the dependence is, which goes to your second question, which is how do we prevent bad actors? How to prevent things like social engineering and hacking and phishing? The fact of the matter is, hackers are professionals and they're very good at their job. A well-designed phishing attempt. A well-designed phishing attack. So not like your Nigerian prince, mass email, but a spear phishing attack has over a 40% success rate, right? Not a click rate, success rate, and that's because it looks real. You go to a site, it looks like a real site, and I think one thing we all need to do as an industry is to not shame people who've been phished. If I'm trying to play goalie against a professional soccer player, football player, they're going to score on me. Against my daughter, I could stop them, but professionals good at their job. I'm not a professional goalie. So we want to put tools in the hands of users, whether it's a consumer, a network admin, to help protect them from themselves, if you will. So again, building the strong authentication technology into the products that they're using, into their devices, and into their general authentication processes is critical to stopping these hackers. And not to belabor this too much, But possession-based authentication, using public key cryptography, where you're authenticating locally to your device, that's what helps protect against remote attacks, right? So a social engineering attack, you were being asked to enter your OTP, that's a vulnerability. If you need to actually touch your device locally, that can't be done remotely. So the best way to prevent remote social engineering attacks is to do local authentication.
Absolutely. John, from the regulatory perspective in the UK, obviously we've got an exciting year of migration plan for SCA. So your take on the passwords and any potential other remedies beyond?
So I mostly agree with Andrew. I think that passwords have an important part to play, at least in the short term, because people know how to use passwords. And of course, they're built in, whether you talk about them as passphrases or unlock pins on mobile devices, they're still really sort of passwords. And they're obviously embedded in the chip and pin or EMV types of transactions we're engaging in at point of sale devices. Ultimately, those will possibly move to contactless or biometrically authenticated, like Apple Pay and Google Pay and so on, transactions. But we're not there yet. We're not for the vast majority of transactions. So I think that the passwords probably have in my view, a slightly longer life. And I would agree that they're probably going to live as a backup option to the other easier, more straightforward approaches of using things like behavioral biometrics or using possession factors. So the mobile device you have, cryptographically strong ones, as Andrew was suggesting earlier on. So I think there are a number of things that could be done, and I think the death of the password isn't yet ready. But obviously, we will need to give customers choices on what they can use, because in some cases they won't have the option to use all the authentication factors they might add. For example, if their mobile phone's out of power, how would you authenticate a customer? If, for example, they've sanded their fingerprints off because they've been doing DIY at the weekend, then how are they going to use their fingerprint to unlock the device that they've got in their hands? I think those are the questions. And of course, treating vulnerable customers, making sure that we're including all the customer base, are very important questions too.
Well, let's trust that the fingerprint sanding becomes an extreme example of having to have a step-up mechanism. But Melissa, what's your and Capital One's take on this?
Yeah, so I find myself in agreement with both Andrew and Jonathan. I don't think the password is going away this year. I don't think it's probably going away in the near future. We do need to get customers to adopt alternates to passwords. And when that happens is when they are easy and familiar. So the reason why we've been so successful with Touch ID, Face ID as a password substitute is because they are easy and familiar. So when they're easy and familiar, that's when customers will use them. I do think the backup option is probably a thing that is going to live for a good period of time. In that regard, the good news for the banks and financial institutions is we can use our risk detection capabilities to say, should I be concerned about the use of a password by this customer in this scenario that they're in? So it starts to make a smaller net for us to protect with password, which is good. And then, I do want to address what you said about, malicious parties. The reality is anything is going to have weakness. So whatever we do, it's like a game of chess, right? Whatever we do, the bad guys are going to do something in response to our action. So, what I believe is it's a layered security controls approach. It's making sure that we are able to detect and prevent harm. We have, those types of controls on money movement. We have controls such as models that detect malicious behavior where we can decline access to features. We use customer notifications. There's just a suite of controls that we always have to have ready, because no matter what we move to next from password, there's always inherent weakness in any one thing. And it's the collective power of layered controls that is going to make our complete authentication process strong. So that's just my take on that one.
Excellent. Thanks so much. Sam, from your side, from Starling.
Yeah, I think we're probably a bit further down this journey because we always designed the bank never to have a password as a primary authentication factor, because by the time we were designing this, such a common kind of problem anyway. So we've never had it as the only login factor. We've always had SCA, and it's never been the primary factor. It's always been as one of them. And then ideally biometrics, but obviously we can fall back to a passcode as the second step up. But we focused on controlling and having alternatives that mean we don't use the password very often. We have the passcode that you use to get into your device, and we occasionally step transactions up to a passcode as a password as a third factor as well. We're really unsure about it, but we put other factors in place instead to do it. Actually, one of the biggest control points for us is the device is our security token, and it's great, and it's got the cryptography on it, etc., so it can sign requests. But how do you onboard a new phone, because you lose phones and change phones and that kind of thing? And so we spent a lot of time designing how you reset one of your SCA factors without needing to go back to passwords and things that are easily phished as well. And we've tried various variants of that over the years, and now we're using your face, so we get people to record another video of themselves saying a phrase our system has generated, so that we know the video wasn't recorded randomly in the street, and we compare that to the video we took of you on onboarding. So we've got 2 high definition videos, complete with your voice and complete with your face moving to a particular piece of text that we on the moment asked you to say at random. And that's one of the factors we use, as well as possession of the debit card or possession of an identity document issued by the government, etc. So we put a lot of time finding other ways to protect the security factor, which is the mobile device, and stepping things up through that. So we do have some passwords in the bank, but they're very much secondary in our transactions already. But I can't see a way of removing them from being secondary, because you need even more factors to reset the secure factors, and you need to be able to reset your SCA factors, because inevitably something will happen to some of them at some point in time. So I think it's always going to be part of the puzzle, the knowledge-based challenge.
Absolutely, and again, I'm afraid you've managed to get yourself put first back up on the list, Sam, by virtue, as you say, as a challenger bank, and therefore one of the newer entrants. You've had the advantage, on the one hand, of coming into this with the knowledge of what was coming through with PSD2, and we're obviously covering SCA today, but equally the other side of the PSD2 coin is the move towards open banking, and obviously the third-party provision aspects and the requirements to authenticate potentially through a third party. Now, from a Starling perspective, first off, Sam, how are you seeing that going, and do you see open banking being a driver for potentially good authentication methodology being adapted, not just within the UK and the wider the remaining EU members, or as a global play? What's Starling's take on that?
So open banking has been around for Starling probably longer than anyone else. I think we were the first bank in the UK to have APIs live in production, because since the day we launched in 2017, before the now industry standards had even been defined and designed, let alone put live. So we've got a lot of experience of properly authenticating third parties against our system, and customers consenting to share particular data elements to a very granular level, and itchboards and things to manage that. I haven't seen wide use of relying in bank authentication data for login yet, although there are now various industry groups and bodies that we're working with and talking to that want to do this, the kind of identification as a service. I know the UK government looked into it with gov.uk Verifile a while ago, and now there's some private sector initiatives bringing along a similar kind of service. It ultimately has always come down to getting enough authenticated, typically seen to be banks, involved in this on the same standard, so that by the time you challenge a customer on a particular shopping website or whatever kind of product you want to purchase, where you really want that reassurance that you've got the right identity, they're only going to use those identification services if you have enough providers, and therefore enough likelihood of the person trying to use the service having an account which they can use to authenticate themselves. And so it's a bit like open banking was, which is third parties wanted to launch services, but they couldn't rely on the banks having APIs, but the banks weren't going to bring the APIs to market unless there was some commercial reason to do so. And so I can almost imagine it being forced on. But actually, I think now that the APIs exist and the ways of identifying third parties have been built, the banks are far more likely to bring this kind of service to market commercially anyway, because the barrier to entry is much lower. We've got a trusted way and certificates to identify third parties. But it's down to, do we need standards on it? Can we get people to build against that? What do you charge for the service? Because the banks spend a lot of money verifying identities, and so at the moment, account information and payment initiation is given away for free because it's given to the consumers for free. But who bears the pounds worth of cost that it is to verify a single person's identity versus then giving that away to other services? And should it be a commercial proposition?
Indeed, thanks. So John, the open banking panels, as Sam's just discussed, there's an awful lot of scope out there for open banking to have huge drives for improving authentication security. How do you see that manifesting itself as we roll out in the UK during the course of 2021?
So I mean, the key thing for me is that open banking isn't just obviously a UK or even a European thing. There are 15 initiatives worldwide, including in the US and Australia and Japan and Brazil, for example. And so I think that one of the key things is that if I am looking at using one of these open banking services, and these are of course services by which they're using my personal data to provide other services, insight into what I spend money on, for example, too much home shopping, or things that give me the ability to initiate payments in a new way, either online or potentially in shops. Those new services are great, but obviously they're only as good as the security behind them. So I, as a consumer, don't want a fraudster to be able to go and take over my account, to download my maybe sensitive personal data, and to take money out of my account and pay it elsewhere. And so for me to be confident as a consumer that to actually use an open banking type of service, I want to be confident that the security is there to actually protect my account. And that's, I guess, the balancing measure. Open banking allows access via third parties to your bank account. Strong customer authentication is the balancing measure. It says, well, that's good, but we're going to make sure that the bank really knows it's you when you're authenticating. And the things behind that, I guess, are looking at making sure that there is a standard way of authenticating that it really is the customer you're talking to. So all of the things that we've been discussing here, the possession, potentially the knowledge factors, but things like biometrics will help in that process. And I think that one of the things is that we're only limited by our imagination in some of the services which could be brought to bear. And it's, of course, not just consumers, it's also businesses. So reconciliation, for example, or initiation of sweeping and pooling between corporate bank accounts could be one of those services which get offered by potentially treasury providers. So it's a quid pro quo. If you're going to have open banking as a means of incorporating newer providers of new services which haven't been invented or thought of yet, then we need to go and make sure that the accounts which are used by those services are appropriately secure, and strong customer authentication seems to be a good balancing measure. And I think I agree with the original legislators who said, yes, we're going to put these two things together in the original EU Payment Services Directive, which obviously comes into UK law as the Payment Services Regulations 2017. I think it's an important balancing thing, and that's one of the interesting challenges that the Financial Conduct Authority, which then supervises both of those third parties and, of course, the organisations which then offer those customers' accounts and provide the strong customer authentication. It has to both maintain the rules and oversee that. We in the PSR are interested in how payments get made, and therefore the payment system rules and how that relates to strong customer authentication. So we're very much interested in making sure that the customers have the means they want to pay.
Thank you. And Andrew, obviously, FIDO, obviously a global. There are different regulatory interpretations of what strong customer authentication means in different jurisdictions. How do you see this all coming through, and particularly from an open banking perspective? Because the banking aspect, as Johnson says, this is also an emerging global market. How do you see the interplay there?
Yeah. So when we look at the SCA requirements, very closely, and we have a lot of members who have a lot of stake here. We have a FIDO European working group that's looking at ways that FIDO uniquely can address SCA requirements by, for example, having a single gesture, with the biometric and device in possession, meet SCA requirements for strong authentication. We also look at some of the trends in open banking, around the world. With a raised eyebrow, if you will, because I think it's really important as we look at open banking to make sure that if this trend is indeed inevitable, which it may seem to be, that it's done in a way that it has security front and center, and doesn't necessarily need to be regulated, but it needs to be addressed either through regulation or by industry. I do think an initiative that's interesting is work being done by a group called the Financial Data Exchange, FDX. Which has created standards that leverages FIDO for user authentication that enables secure third-party access to consumer financial accounts in a way that's both privacy preserving but also easier to use than legacy password-based approaches. So it's not relying on screen scraping. It leverages kind of built-in possession-based authentication to allow for secure access to consumer data, consumer financial data, across service providers. And so, we look at things like that as an ideal approach that, both, traditional financial institutions as well as aggregators can point to and leverage to, provide secure, open access to financial data to consumers.
Excellent, and there's a very good point on the screen scraping, and the Boston Fed have picked up on that recently as one of the key areas to look at going forward. We're coming near to a close on time, so if I can go back around for sort of closing comments from each of you, sort of 30 seconds or so from each. So Sam, you first, please.
What's to say? There's a real challenge. We need to work on SCA methods and more fallbacks so that we can get rid of passwords. And actually, I think we need to look at this beyond the bank, that a lot of these attacks are not taking place on banking channels. They're taking place on social media and over the telephone and things. And at the moment, those parties have no responsibility for this. Effectively, you can sell a fake iPhone on a social media site, wire the transfer, the bank picks up the bill, and the fact the social media site has got a criminal there selling these fake goods, they don't have to do anything with it. Through to the not actually authenticating caller identity, email don't necessarily authenticate who's calling you. So a lot of these frauds are facilitated by weaknesses elsewhere. And the banks at the moment aren't in a position to do anything about it. They're just picking up the consumer protection side of it at the expense of all banking customers, ultimately, because everyone who banks has to pay the cost of that insurance. So SCA has really helped solve the fraud problem at the bank side, not solve it, but help reduce the volume of it. And I think we need to look outside of banking now to where these attacks are taking place. We're going to really reduce the volume and protect consumers from fraud.
Excellent, thank you. And Melissa?
Yeah, thanks. So, I think the key here is, we need to be good at risk detection. We need to be good at customer experience. Adoption comes when, customers find things easy and familiar. So we need to remember that. And then, my earlier point of it's a never ending chess match. So we always need to make sure that we are using a layered security controls approach and looking across the financial transaction for ways that we can detect risk and protect our customers. So there's a lot on us, and I think that's the reality of customer authentication.
Absolutely, thinking 7 or 8 moves ahead. So John,
So for me, I think the important thing around strong customer authentication, effectively what we're saying is increasing the level of security, protecting our customers' payment accounts and other banking accounts as well. I think the key thing is that we need to make sure that our customers are happy, they're familiar with doing it, familiar with doing the appropriate methods, they have the resources required to go and perform those authentication transactions, and it fits into their transactions seamlessly. And if we can sufficiently easily manage to shoehorn that particular piece of security in, then it'll be very successful. But I think there's an education piece for consumers that this is what we're doing to protect their accounts, to protect the money in, and I think that's what the area that we need to do more on.
And finally, Andrew, before we try and go to questions, if we have time for them.
Yeah, absolutely. So, I think it was a great conversation, and so thank you for having me. I want to end with kind of a bit of optimism. I know we were talking before about how passwords aren't going away right away, but we've made amazing progress on reducing dependence on passwords in just the past couple of years, and we're seeing this trend accelerate. There are companies that are actually getting rid of passwords altogether. So NTT Docomo, for example, the giant network operator in Japan, they're getting rid of customer passwords altogether, and they have other means of doing account recovery. Again, I mentioned eBay; they're actually looking at passwordless options. We're seeing companies like Facebook and Google and Twitter and all deploy FIDO authentication as a preferred means of authentication. So I think that we're seeing rapid progress, and it is accelerating, and we have opportunity to build on this to truly move people beyond passwords. In addition, I think the Starling example is real interesting, right? A modern bank built from the ground up without the technical debt of depending on server-side shared secrets. That's a great example of some of the benefits of kind of new entrants into this kind of financial services space who can really help protect newer customers, but the broader network from kind of credential-based attacks. So I think there's a lot of positive work happening, and we're looking forward to seeing more of it as we move forward, from 2021 and beyond.
Well, thanks ever so much to the panel, and thank you for everyone out there for joining us for today. Which I think you'll all agree has been a fascinating coverage of a very topical area. Again, I'd just like to quickly thank Sam Everington from Starling Bank, Melissa Heng from Capital One, Andrew Soloyarki from FIDO Alliance, and Jonathan Williams from the Payment Systems Regulator. So thank you all.